Home prices are soaring. Buyers are having to pay above most sellers' asking prices, and the housing market feels just like a feeding frenzy during Shark Week on the Discovery Channel. Maybe you want to buy a home, but you don't want to feel like a fool for buying a home right before home prices come tumbling down. So what do? This video was put together in response to many of the questions and comments that I received during my recent home affordability video. There's a fringe of viewers that are completely confident that home prices are about to fall. Some are baseless, and it's obvious that they are just the normal small group of people who are easily influenced by the fearmongers who claim the sky is falling down. But there have been other viewers who have expressed their anticipation of falling home prices based on news and partial data that they have read or viewed, and they have some valid concerns that I want to address in this video. We are going to take a look at 80 years of home prices in the US, and then we're going to use what we learned to anticipate a realistic future for US home prices. For our Tallahassee viewers, I've included a link to the list of all the homes for sale in Tallahassee below, where you will find that the majority of homes below the top of the market are already under contract with buyers. The market today is as hot as a July day in Tallahassee. Hi, I'm Joe Manausa, author of The Business of Getting Business and the creator of Manausa.com, where I've helped tens of thousands of people buy and sell homes. I would like to help you too. If you already are a subscriber, thank you and welcome back. If you're not a subscriber, please consider becoming one now. We offer the most thorough and accurate housing market reports on YouTube, plus answers to your real estate frequently asked questions, and we provide virtual tours of some of the most beautiful homes in Tallahassee. Please remember to like this video, then click subscribe and hit the bell so that you're the most informed buyer or seller in your next real estate transaction. If you're somebody who is thinking about buying a home, but you're waiting for home prices to come down, then this is the video for you. Winston Churchill once wrote, "Those that fail to learn from history are doomed to repeat it." I suspect he got the idea from somebody else, but that's not the point. The point is that we can gain insight into what is going to happen in our future by studying what has occurred in our past. So, relating to real estate, if you believe home prices cannot come down, you might end up learning a tough lesson if you were to buy a home at the wrong time. And if you believe that home prices must come down, you too might learn a tough lesson by failing to buy while homes are priced relatively cheap. Rather than having unfounded beliefs in either direction, why not study the past and see what it suggests will occur moving forward? For example, if we see that home prices have never fallen in the past, that would give us pretty good confidence moving forward that we won't see home prices fall. On the other hand, if we see that home prices fall as often as they rise, it would give us a completely different outlook. In order to gain the insight that we need, I have gathered 80 years of data on U.S. home prices so that we can examine how home prices have risen and fallen through the years. This graph plots 80 years of average home prices in the U.S. The average price of homes sold in the U.S. has risen 5.1% annually over the past 80 years. As you can see by studying the blue bars in the graph, it has not been a straight climb like the red arrow shows. Rather, we have seen some ups and downs over time. Since 1941, the average home price in the U.S. has risen in 73 years while declining in just 7 years. In fact, 5 of the 7 declining years were from 2007 through 2011, the result of many causes, which included a significant overbuilding by U.S. home builders. This graph is revealing. On average, home prices drop just 1 year out of every 11, but in reality, we've seen just 3 periods where prices have dropped over the past 80 years. 2 of the 3 periods were relatively insignificant, a 0.1% decline and a 1.3% decline in singular standalone years, but 5 of the 7 were significant and impactful. Those 5 years of declines are still fresh in the memory of experienced real estate professionals, investors, and many homeowners. One has to wonder if, due to the recency of those years, some people might be giving them a greater significance than we would have had they been further back in our history. From 1942 through 2006, a 64-year span, home prices fell just twice, one for 0.1% and one at 1.3%. Take that in. 62 years saw the average home price grow while just 2 years showed it decline. During that span, you could argue that home prices rise in 30 of every 31 years, and when they decline, it's only slightly. History tells us that as a general rule, the average home price is going to rise. If we had social media from 1942 through 2006, how many YouTube experts would have wrongfully called for falling home prices? Now, if you are one who has been greatly influenced by these fear-based reports, don't shut off this video think I'm going to say that home prices can't come down. I'm just trying to point out that home prices rarely decline, and when they do, it's not usually a significant level. Rather than relying on fearmongers that get a lot of attention with their shocking headlines, whether it be about runaway prices or plummeting prices, let's evaluate current market conditions and the variables that will ultimately decide where home prices are heading. In all markets, from houses to pork bellies, the supply and demand relationship determines price movement. If you want a quick assessment of where prices are heading for the near future, a quick look at the supply and demand numbers will tell you what you need to know. I have produced a table that shows the relative supply of homes for sale in Tallahassee, and it is similar to what you might find in most other U.S. housing markets, though there might be differences at the higher price points. The relative supply of homes for sale is measured in months of supply. The magic number that we're looking for in the table is 6.0, which is typically regarded as a balanced market, or what is referred to as market equilibrium. At market equilibrium, neither sellers nor buyers have an advantage in the market. Anything below 6 months of supply of homes is heading towards a seller's market, and anything above 6 is heading towards a buyer's market. So, it is the supply of homes relative to the current rate of demand that determines the direction of home prices. It's not what goes up must come down. If you thought that back in the 1960s, you would still be waiting for home prices to drop back to $18,000. The red shaded areas and price ranges are all showing sellers' market conditions, and the bottom line for all areas of Leon County is fully shaded red, thus revealing a very strong seller's market. This means that we expect to see home prices rise for the foreseeable future in Tallahassee and in most other U.S. housing markets too. Market conditions won't turn around overnight, but we will see changes coming when these numbers start to move in opposite directions. In order to forecast those future moves, we really must study the variables that impact both the supply and the demand for housing. On the demand side of the market, we need to monitor the changes in mortgage interest rates, wage growth, population growth, wealth accumulation, and the generational shifts that some people claim influence the frequency of people's home buying timeframes. On the supply side of the market, we need to monitor land and development costs, construction costs, mortality rates, distressed properties, and demolition. Did you know that between 200,000 and 300,000 homes in the U.S. are demolished each year? These are the variables most likely to have a significant impact on the housing market. I have written articles and produced videos on each of these on multiple occasions in the past few months, and I've included some links below if you would like to drill down deeper on these important points. For the purpose of keeping this video moving along, I will summarize the conclusions reached and supported by data from those recent videos. If you think I'm underemphasizing a point, please do go see the other videos where I spend the time to present the data and support the conclusions. Home builders have failed to deliver homes that our growing population needs due to many reasons like the rising cost of land and material and labor, creating a shortage of homes for sale. This shortage has created pricing pressures. Declining mortgage interest rates has increased demand, further exacerbating the supply shortage, causing a run on homes and double-digit appreciation rates. This demand will not likely cool much until mortgage interest rates rise. I've been saying it for years. This is a mortgage interest rate inspired market. Smart people are taking advantage of historically low mortgage interest rates and increasing their asset holdings. Unlike 2005, when the market was rocketing upwards and builders were delivering mightily on the supply side, the majority of listings in today's market come from buyers moving up, over, or around. This is a hugely important point if you're worried about prices, because we're not creating enough new homes. Prices are exploding higher. Remember, our population has grown by 35 million people since the market crashed. We need more homes. When Bob and Mary Smith decide to sell their home, it adds one to the inventory. But when the Smiths buy the replacement home, it removes one from the inventory. It takes new construction listings to truly impact the supply side of homes for sale most of the time. In 2005, on top of normal demand was the demand from people who had pulled their money out of the ailing stock market when the tech bubble burst. It was coined irrational exuberance, with speculators buying and flipping multiple homes, never intending to occupy them. Rather, they just wanted the profits they thought would last forever. During that time, builders kept pumping out inventory because consumers kept buying. Had you been a home builder in 2005, you would have been building homes too. More than 2 million new construction homes were brought to the U.S. housing market in 2005 alone. Since 2008, we've been averaging less than 1/2 of that each year. At first, the market needed construction stopped because the market was oversupplied. But by 2016, the market balanced and since has been falling short of new homes by several million over that time span. Today, builders are not producing homes, and they're not pumping out the inventory. They are not adding to the supply of homes at a substantial rate like they were in 2005. So if the housing market slowed abruptly today, the buyers who would walk away would also be pulling the listings they were intending to sell in order to buy their next home. It's not builders who cannot pull their listings as we saw in 2006. It is consumers who then remain living in their homes. A cooling market should not leave us with a devastating supply imbalance that needs 10 years to be consumed, as we saw in 2007. For viewers who want to comment, what about foreclosures and homes in forbearance? I've covered that in numerous articles and videos. I recommend you start with the link I've included below. Unlike many people who provide regular written and video opinions on the U.S. housing market, I have little concern about a bubble or falling prices in the near future. Most signs point to a very different direction. But I do have a huge concern for what I believe will be a generational change in the housing market. I'm talking about affordability issues due to real estate inflation. Our population has grown and we need more homes. The new homes are costing significantly more than did the old homes. If you think the future construction costs will be lower than pre-COVID construction costs, you're among the minority, though there are some COVID-related spikes that will come back down towards pre-COVID prices. I have received recent comments on my videos telling me lumber prices are dropping. Well, that's great, but are prices dropping from the 250+% rise we saw due to COVID-related issues, or are they dropping lower than they were pre-COVID? You see, none of my long-term concerns about the cost of new construction is based on COVID. The fact is that the cost of land, sticks, bricks, and labor is rising, and it is doing so at a faster rate than historically normal. Think about this. The minimum wage has risen 68% since the housing market was booming in 2004. Think about how that translates down to the price of materials and the cost of labor. The production of all wood products plus all other materials that go into the construction of a home has been impacted by this 68% increase. Does that make sense? Well, how does this scare you? In Florida, the minimum wage is going to rise by 75% over the next 5 years. Not 68% in 17 years, 75% in just 5 years. How do you think that will impact the cost of building new homes? Do you really think we'll see falling prices for new homes? The only way that happens is if we overbuild the market, and then only those homes taken from builders in foreclosure will possibly be cheaper. But if the market is not oversupplied, how will prices come down? It's the high cost of new construction that is serving to pull existing home values higher. The disparity between new and used homes has been tightening back up, and this could help builders bring inventory that is needed were it not for this one small problem. Okay, this one huge problem. Who can afford to pay these prices for a home? In a future of higher prices and higher mortgage interest rates, I see soaring home affordability levels that only wage inflation will be able to address. Right now, we're seeing huge wage inflation at the bottom of the pay scale by voter mandate in Florida and many other states. But we'll need to see that surge throughout the middle and higher pay scale ranges before it begins to aid in the lack of affordability of homes. Right now, home affordability is excellent. Only 5 of the past 30 years have been better. But when rates start to climb as a result of the Fed combating inflation, home affordability will quickly fall to the worst year on record. This is my greatest concern for the housing market. Even home affordability hitting a new low will not in itself bring down home prices. It will just curb demand, and people will stop moving unless they absolutely must. This is why I believe that only a flood of new homes being built can begin to threaten home prices. So don't expect home prices to come down. Rather, expect to see demand plummet and the overall market will see the home ownership rate decline. Remember, this will only start to happen when we see higher mortgage interest rates, so expect demand to remain strong for the foreseeable future. Eventually, there will be many families who will simply not be able to afford a home of their own, and those who today would be starter homeowners tomorrow will be tenants. All of the housing market variables point to rising prices. Most of the economic variables seem to point to economic recovery, and thus we should have an expectation of rising mortgage interest rates when the Fed raises the federal funds rate. Somebody contemplating buying a home should recognize that tomorrow's prices will be higher than today's prices, and he will be borrowing the money for the home at a higher mortgage interest rate in the future than what he would have to pay today. When all the factors are considered, home affordability is likely better today than it will be at any other time in your future. As I said before, buy a home now. Get as much home as you feel comfortable with because it's likely you won't be able to afford to move up in the future. Lock in your purchase with a 30-year fixed-rate mortgage loan. We're heading towards a time of high inflation. One great hedge is to own assets that will inflate faster than will your cash. If you would like to see more videos about current housing market conditions, I've assembled a great playlist that you can view by clicking on the box on the top left corner of your screen. For a playlist of answers to questions from viewers just like you, just click on the box below it. Please remember to like this video, check out the links below it, and subscribe to our channel so that you never miss anything.